News Radio 700 WLW.
Ken Brew for Scott Sloan. Great to have you with us on this glorious Monday. So if you're out looking for a home right now and you don't have a mortgage, you know what the headlines are. Mortgage rates are going up, 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 up. And in fact, they're up significantly now than what they were a year ago. Why are mortgage rates up? Well, the Fed is raising the prime, and the prime, although not directly related to the rate that you might pay in a mortgage, there is a residual effect. And it would seem like the days of the 3% mortgages are well behind us, and maybe for the foreseeable future. So what do you do? If you want to buy a house, you realize that because of the way things are financially with this country, that it will cost you more than what your means are right now. Should you go to what is known as an ARM? Now, a lot of people cringe when they hear that. Adjustable rate mortgages. In other words, it's set. You're paying a set rate for 3 years or 5 years, but then after that, well, then it goes up. It may be capped as to how much it can go up each year after that 3 or 5 years, but you just know that there is a possibility that if inflation continues and interest rates continue to rise to battle inflation, it may be even more expensive 6 or 4 years down the road with this adjustable rate mortgage. Should you go ARM if you need to buy a house? And is it like it was back in the bad old days of the late 1980s or the bad old days of the 2008s and 2009s? In other words, is this like your dad's old ARM? Standing by as somebody that knows the mortgage business inside out. We've had GP Theriot on before. Not only has he served this country in uniform as a captain in the United States Army, he brings now 20 years of experience to helping people achieve the American dream, in particular, those that have served in uniform in this country. And GP, how are you on this glorious Monday?
I am doing outstanding. It's the first day of school, so the kids are back, so I feel like I can get back in my routine again.
It's vacation time for mom and dad.
Yeah, well, I don't know about that, but at least we'll get back to our normal routine for sure.
I heard you. Now, listen, there are people that cringe about ARMs, about adjustable rate mortgages, because they've walked down that road before and they've been burned. It might be a 3-year, it might be a 5-year. And for 3 years or 5 years, that rate is set, depending on what the rate is. But after that, it could go up incrementally year after year after year. But we're in a position right now in this country where a lot of people who could have afforded a home a year ago when interest rates were down in the high 2s and low 3s, now we're looking at this situation and saying, well, this is the only way I can afford a home. Is it bad business to get involved with an adjustable rate mortgage right now?
Not at all. I used to do quite a bit of ARMs before we had the great low rates, the past 2 years, 30-year fix. But adjustable rate mortgage, and you did an outstanding job really kind of giving the details of what the ARM does. But, you said it in the 80s, yes, it has a bad history of ARMs, people getting burned with the ARMs. But over time, they fine-tuned this product, the adjustable rate mortgage, meaning with the adjustments now, there is a life cap. So what does that mean? So your rate is locked in. Let's say you have really 3 options. You have you said a 3-year, but a 5-year where the rate could be locked in for 5 years, a 7-year, 7-1 ARM locked in for 7 years, and we even have a 10-year that's locked in for 10 years. And so, but what happens is with a life cap, what that means is you had your start-off rate. So I'm just going to use simple numbers right now. Let's say your start-off rate is at 4% today on an adjustable rate mortgage. So that's locked in, let's say, for 5 years at 4%. With the life cap now, you have usually the norm is 5% life cap. So what that means is the highest this ARM rate could ever get to is no higher than 9%. But on that first adjustment, adjusts it could be 12 months or 6 months, depending on which product you get. But there's a 2% cap, meaning it cannot go above 2%. So if you start at 4%, worst case adjustment would be no more than 6%. I'm not doing a lot of numbers. Does that make sense?
What I'm saying? Yeah, if it's a 4% loan, let's say on a 3-year ARM, by year 4, the most it could go up to is 6%, is what you're saying.
Correct.
But then
now,
it could the next year though, GP, it could go up another 2%, right?
That's correct. But then you have your life cap at 9%. So let's say if we see rates, 3-5 years from now, will they be in double digits? At least you're protected with that life cap. But another thing too, though, is what you have to realize is it's based off the index, and right now all ARMs are tied to the 1-year Treasury constant maturity rate. And I looked it up this morning. That today is at 3.25, that index rate. So what does that mean? Does my rate change to 3.25? No, you take your margin, which is usually 2.25%, and you add those two together. So if it was adjusted today, your rate would be at 5.5%, which is the going rate pretty much right now on the 30-year fix. Just to give you kind of a perspective of, what does it look like if it does adjust? So it could adjust to your favor based off where the index is. And looking at history, we've seen adjustments where I've had clients in the past, they love ARMs because one or two things, it could adjust to their favor, or they could always refinance it into another ARM where that rate's going to be lower than the going 30-year fix.
Sure. Fall in love with the house, don't fall in love with the mortgage. And you could, or date the mortgage. You could, as you say, refinance after a certain amount of years. Now, there would be cost in refinancing, but it would at least let you get into a house that you either need because of relocation or whatever, or you want at this point. So there are a number of ways to play it. If you're with the right lender, they'll be able to figure out what works best for you. But we're not talking about these loans that were, I don't know if they even still exist, but there were loans that were out there and not that long ago where it would be a jumbo loan. You might get 7 years at fix, and then the rest of the note is due after 7 years. That's not what we're talking about here, right?
No, that's considered a balloon note.
Yeah.
An ARM it's amortized for 30 years. So you're still having the amortization scheduled for 30 years. You're just starting off with that lower rate that is locked in for 3, 5, 7, or 10 years. Now, what I love to say to my clients, a lot of them they don't have the risk tolerance for it, and I get it. ARMs are not for everybody, but when we sit down and go over with clients, the big question is how long do you truly see yourself in this home? Because the average person nowadays in a home is anywhere from 5 to 7 years. People nowadays, we're not buying the long term where, they're not staying in their homes 30 years. And the reason why is because there's just no stability anymore. I mean, people aren't working with companies to retire with the gold watches. I mean, constantly are moving to different companies, to other states, whatever it might be. So when we really lay that out, a lot of times an ARM makes sense for them, knowing that, GP, I know I'm not going to be in this home for more than 5 years, so let's look at a 7 or 10 year. Mm-hmm. And 2, 10 years is a long time if you really think about it. I mean, during that 10 years, you're going to have an opportunity to refinance that if you really want to fix rate into a 30 or even into a 15-year if you wanted to.
Yeah. Let's talk about a couple of things. We're talking with GP Theriot. He is a real estate expert, knows the mortgage industry inside out, and we're talking about ARM loans vis-a-vis conventional loans. A couple of questions here right now. When I see the Fed raise the prime 75 basis points or 50 basis points, they've done 75 twice during the spring and summer. They're probably going to raise it another 50 in September. It's going up in an effort to battle inflation. That doesn't directly affect a home mortgage, but it does have a residual effect. So when I'm sitting at home and I'm hearing this news, either on the radio, watching it on television, or whatever, what in the back of my mind should I be thinking about how that could affect my home buying search and a mortgage I might have to go out and buy and shop for and buy? How does that affect the mortgage business?
Yeah, absolutely. Well, first off, you need to be sure you're in good contact with a professional mortgage person to know how did that affect the rate. But to answer your question, absolutely. I mean, I know there's so much bad information being put out there. Feds raised the rate 0.75, so that means the mortgage rate has gone up 0.75%. And that is not the case. It's not a one-to-one trade-off. What you have to realize is when you hear about the Fed rates going up, that plays an impact on short-term rates, such as car loans or credit cards or even home lines of credits, home equity lines of credits. Now, it will play a factor. But, when the feds came out a couple of weeks ago and they said they're increasing it, we actually had a decrease in the mortgage rates. And here's the reason why is because you just said it. The feds are talking about raising it another 0.5%. I think they probably will come out another 0.75% personally. And so we're already preparing and pricing that in so you're not hit or sticker shock. And usually it'll pull back once that comes out. And so, yes, inflation plays a huge factor with rates. Rates are, it will go up, but we're already pricing that. Right now, we're already seeing rates. We had a nice little dip, but rates are going up right now because we are preparing with what's being said of, the feds will be meeting again and will be increasing the Fed fund rate.
Yeah. I mentioned that you served this country in uniform. You rose to the rank of captain in the United States Army. And one of the more difficult things for a veteran to do, and there are very many things that a veteran has to deal with that a civilian does not have to deal with, is finding a mortgage and then buying a home. And from what I'm told, you're on a personal mission here to bring awareness of the VA loan system and the VA home loan benefits so that your fellow veterans and those in active military right now, quite frankly, can afford homes. Tell me about that mission, because I know that if you're a military family, there are things you need to work around and work through that the average guy like me does not. What is this mission you're on?
Yeah, so I'm on a mission. You said to bring awareness because there's so much bad information out there about the VA home loan, meaning it's not a good loan. And that is so not true. It is actually the number one best performing loan because it is government backed. And I've got to get out there and educate not only, real estate agents, but also our veterans, our active military, because they're hearing this. So they're afraid to even jump in the game to use their VA benefits to buy home ownership. When I bring that out, the myth, because it's a 100% loan, they think that's a bad loan because they don't have skin in the game. And that is not false. What I like to tell people is, these agents that are selling homes, us, living in this great country, doing what we get to do, they're fighting for this great country. So they've earned that benefit, that 100%. And a lot of these military or veterans, they usually have anywhere from 5 to 10% saved up because of their deployments or because they've got a good job. I mean, they're also the number one hiring team out of the military because of their discipline. So, yeah, I'm on a job to bust all these bad myths to get more military veterans home ownership. Look, they're defending our great country. So let's help them earn a piece of this land and own home ownership.
100%. And the misinformation on VA loans. There's secure loans. VA loan is a very competitive loan. And quite frankly, if you are a veteran, this is something that ought to be, for you, a no-brainer. You ought to just take advantage of it. I mean, you serve your country. This is a benefit of you serving your country. Use all the benefits that you get from having spent time serving this country in uniform. I just think it's, I don't know why that there is bad information out there. I haven't researched it certainly as thoroughly as you have. But there's the fact that if somebody says VA loan and you're a veteran, you shouldn't run from that. You should embrace it, correct?
Oh, 100%. I love how you said that, embrace it. And that's just it. And right now, though, we're seeing, I've been getting VA offers accepted, when it was a crazy market because we had a strategy, and I would educate these listing agents on why this is a great offer. Because once 100%, so let's say when they were making these crazy offers, if it didn't appraise, what's 100%? So we've got a little wiggle room because these veterans have the money to make up the buffer. And that's the other thing. They thought they couldn't make up the difference if it didn't appraise. It's just one option. But, yeah, again, they've got to just reach out, get educated, so we can get them in home ownership. Because what I'm seeing right now, more and more agents are wanting to accept these offers because the market is shifting. Homes are sitting a little bit longer. So, oh, wow, these VA offers are a lot more attractive. Tell me more.
Yeah, absolutely. Absolutely. GP, it's always great catching up with you. I'm glad your life is back on even keel. That school is open. You're back in your routine, and I'm sure there will be a topic here we'll visit on very soon. Stay well. We need to hear your voice, okay?
Well, yeah, if anybody's reached out, veterans, anybody out there, please reach out to TherioMortgage.com. That's how you can track me down. I'd love to help anybody out there that needs assistance or has any questions.
By the way, Theriot Mortgage is spelled Theriot mortgage.com. Kind of like, and I'm sure somebody has done this maybe once in your life, like the Riot mortgage.com. You probably got that once or twice in your life.
Hey, I tell people we have a great time over here. We're going to have a riot, but that means that's a good thing. We're going to get you in home ownership.
GP, stay well. We'll talk down the road. Thank you.
Thanks so much. Bye-bye.